Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company that's received a bit of a Dear John letter from the stock market. Don't worry, it's not as dramatic as a breakup, but it does mean they need to shape up or ship out. We're looking at an 8K filing from BioCardia, filed on April 4, 2025, reporting an event that happened a few days earlier on April 1. The report focuses on a warning they received from Nasdaq, the stock exchange they're listed on. The main issue? BioCardia doesn't meet Nasdaq's minimum stockholders' equity requirement, basically. They don't have enough assets compared to their liabilities. As of the end of December 2024, their stockholders' equity was only $837,000. Nasdaq requires at least $2.5 million to stay listed. This means their stock could be delisted, which means it would not be traded on the market. So what happens now? BioCardia has a little over a month until May 16, 2025 to submit a plan to Nasdaq showing how they get back into compliance. If Nasdaq accepts their plan, they might get an extension to actually fix the problem, potentially up to 180 days from April at 80 days from April and 80 days from April and 80 days from April. 1 tab E25. For now, this notice doesn't immediately affect BioCardia's stock. It's still trading on the Nasdaq Capital Market under the ticker symbol BCDA. What will Nasdaq look for in BioCardia's plan? They'll consider how likely the plan is to work, BioCardia's past track record, why they're currently out of compliance, any other events happening at the company, their overall financial health, and what they're telling the public. If Nasdaq rejects the plan, BioCardia can request a hearing to argue their case. The filing also includes a section on forward-looking statements. These are basically predictions about the future. BioCardia reminds everyone that these predictions are not guarantees, and things could change. They point to their annual report from late March of 2025 and other filings for a full list of risks that could affect their actual results. It's a standard disclaimer, but important to keep in mind, especially when a company is facing a challenge like this. Now let's talk about what this means for BioCardia. Receiving a delisting notice is never good news. It raises questions about the company's financial stability and future prospects. Delisting a company's stock could make it harder for them to raise money and could negatively impact their stock price. In this case, BioCardia needs to act quickly and decisively to regain compliance with Nasdaq's requirements. The company needs to convince Nasdaq that they have a solid plan to improve their stockholders' equity and that they are capable of executing that plan. This could involve raising additional capital, cutting costs, or improving their financial performance. The company needs to convince Nasdaq that they have a solid plan to improve their stockholders' equity and that they are capable of executing that plan. This could involve raising additional capital, cutting costs, or improving their financial performance. The company's success in the coming months will depend on their ability to demonstrate financial stability, that they have a solid plan to improve their stockholders' equity, and that they are capable of executing that plan. This could involve raising additional capital, cutting costs, or an company. BioCardia is a biopharmaceutical company. This means that their products and services are based on biological and chemical research. Those kinds of companies can have a long time to profitability, since the time from research to marketable product can be long. I am concerned that the filing emphasizes the company's intentions and plans, but doesn't provide concrete details on how they will be achieved. They are at a disadvantage, but are actively working to remedy the situation. Thanks for watching. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more corporate deep dives.